And then we turn our attention over to Tom White and Options Corner, where we analyze unusual options trades that we're seeing throughout the day. Tom's been also following all the breaking news. If you want to give a guide, I know you have some great trades, real trades that you're going to share with us, but maybe a quick thought here on the Fed Beige Book.
Yeah, Beige Book, coming in line. It doesn't have the impact that it used to, Nicole. I think more what the market's trading on now and the bounce back that we're seeing is that the White House confirmed that they're going to push back the auto tariffs for at least a month. And then the White House press secretary said that they're willing to discuss more exemptions as far as tariffs goes. So those headline tariff risks that have pushed down markets so far this week, we're getting a little bit of a reprieve from them. And it seems like investors and traders are just grasping a hold of that headline news that comes out on, it seems like a second-by-second basis. You got the S&P up now like 1% on the day. So I don't know if this is going to stay this way, Nicole, but definitely a headline-driven market right now.
Right. And look, you had Justin Trudeau calling. Yeah. There were some headlines that he actually called the president from Canada to, well, I don't know if he was in Canada when he called, but he's from Canada, right? Yeah. To call the president to let's discuss the tariffs, because then, the reciprocal tariffs will be coming following. And so obviously it brings up the conversation. And to your point, with the White House pushing back some of the auto tariffs, so markets coming back a bit. I mean, big move here for the S&P 500, which now is up 1.1%. Let's take a look at some movers. Delta Airlines on your radar. You found a neutral to bearish options trade today.
Yeah, the stocks pulled back. It got into bear market territory over the last couple of sessions here. It was down more than 20% from the all-time highs that we saw in January, just below $70 a share. Having a nice bounce back here today. But I think the headlines as far as consumer spending and consumer sentiment, confidence data that's been pulling back a little bit lately, one of the first segments of the market and the economy that gets, trounced in those type of situations is discretionary spending. So what does that mean for the airlines? Now, typically, we get mid-quarter updates from the airlines where they kind of rejigger their estimates for the current quarter and maybe for the fiscal year. We'll wait and see if that happens again and see if the consumer does start pulling back, because one of the first things we all know, Nicole, when you start tightening your belt, you stop traveling as much as you used to, even though over the last couple of years, the airlines have been doing really well. Their Delta's fiscal year EPS was up greater than 20 or 10%. Free cash flow they expect to see this year in the fiscal year of $4 billion. They're probably the most well-run of the major airlines out there, and the stocks reflected that over the past year and a half or so. But we did see some unusual option activity here that's maybe taking advantage of the little pop-up, maybe looking forward to maybe some consolidation or even a further pullback in Delta Airlines, because I did see a trader out in the April 17th monthly options that expire in 43 days. Traders sold 5,000 of the April 57.5 strike calls, collected a credit of $2.94 on those, so the break even is $60.44 over the next 43 days. That's about 7% above the current share price in there. So they're giving themselves a cushion, selling some higher implied volatility levels on the pullback and the pop in the VIX that we've seen. They also sold some May 65 calls around the same time frame also. So this could be somebody that owns a lot of shares and just wants to hedge some of that stock ownership that they have. Or it's a speculator thinking, hey, we're not going to go up much from here in these airlines. We've got too much as far as, consumer spending. There might be a pullback in consumer spending if these tariffs take hold, or if the jobs data starts coming in a little bit lighter. So, yeah, somebody taking a neutral to bearish stance here in Delta.
All right. Thank you for that. This, as the market continues to rise on that tax exemption of the autos, that auto tariff, you brought us that. Thank you for that, Tom White, because it's very evident how that's moving the markets. Let's continue and take a look at another name, and that's Nvidia, where you found a bullish trade.
Yeah, this is that line in the sand type of stock at this point, Nicole. It's still up, over nearly 40% from year-ago levels, but it's pulled back pretty significantly. It's in correction territory. Those all-time highs that we saw were off about 11-12% from those levels. Bear market territory off 23%, from all-time highs that we saw. This is DeepSeek news. This is a pullback maybe in AI spending. It's, the market wants more than what Nvidia gave on their earnings event, even though they beat on EPS, they beat on revenue, they raised guidance moving forward. Supply chain issues for Blackwell didn't really come to fruition, but it just seems like investors are kind of pulling away from this stock recently. But we have seen a nice little bump over the last couple days. And I think a trader kind of taking a stand here because we saw a massive trade in here out in the June 120 strike calls. Trader bought 100,000 of those in one big chunk, one block trade, paid an average debit of $12.14. So the break even just above 132 over the next 107 days is about 12% above the current share price in Nvidia. They also sold out of a long position, it looks like, in the April 120 strike calls. They sold 100,000 of those. So there was a big open interest position of over 120,000 in that strike. So it looks like they sold out of that strike, gave themselves some more duration here with the expectations over the next 4 months that we're going to see Nvidia popping. And you don't need that big of a move. I mean, 13% move higher over 4 months isn't much for Nvidia. But yeah, this is a big block trade, Nicole.
Unbelievable. Okay. A big one at that. And we're going to be talking about quantum computing later in the show. And we remember Jensen Huang's comments pertaining to quantum computing. So a little spin-off segue for that. And then how about Micron? In this case, you found a bearish trade for this.
Yeah, the stock's having a nice day today on that rebound that we've seen in tech in today's session, but still down about 40% from all-time highs last June. This stock was, you can see there from the chart, this stock hit $157 in June of 2024, and it's pulled back pretty significantly. But this is one of those areas, memory chips, that's a boom and bust cycle, and it's happened repeatedly over my trading career where you think everything's going well and the stock just gets hammered. They have to cut prices, inventory levels go up. So this is a really volatile segment within the chip making space at this point. High bandwidth memory chips, the additional chips needed to handle these AI workloads and data centers was supposed to be their golden goose, and that's why the stock hit all-time highs last summer. But we've seen quite a bit of a pullback here. Now, the company does report earnings on the 20th of March, expecting nearly $8 billion in revenue, $1.43 per share in adjusted earnings, which would be improvements over year-ago levels when we had some cloudy numbers there. But I did see some unusual option activity in here, maybe setting up for some downside, or it's a trader taking some protection against maybe a long stock position, because out in the April 11th weekly options that expire in 37 days, trader bought nearly 10,000 of the 70 strike puts, way out of the money to the downside. They paid an average debit of about 97 cents. So the break even for this trader where they start to profit is below 69.03 over the next basically 5 weeks. That's 27% below the current share price in there. So that's why I'm thinking maybe it's a hedge against a long stock position. But if it's just a speculator, thinking I'll take a cheap shot here to the downside in case earnings are bad on the 20th, this might be the way to play it. But yeah, somebody taking a bearish stance here.
Right, pretty amazing. But to your point, it may be a hedge to offset maybe a trade on the other side.
Yeah.
Very interesting. Thank you for that. Appreciate it. We've seen the markets here up about 50 points on the S&P 500. Tom White, thank you so much. The S&P went from 5,800 up to about 5,850 now in the last 15 minutes or so. So some big moves there.